Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. This is your weekly video for Sunday, March 26th. This video, as usual, is brought to you with the help of time-trades.com. This is the little website that I built myself to help out with timing and generation of timing signals and analyzing timing patterns and cycles. So if you're curious, if you want to check out the tools that I use on this video, feel free to navigate over to time-trades.com and sign up for a 14-day free trial. Okay, that's it for the advertisement this week. Let's get right into it. What we want to look at first is last week's performance relative to our forecast. I guess I'd rate myself about a C on this one. You can see the yellow line is the forecast starting from Monday over here. I had the markets going down into FOMC and then coming up. I actually thought the move out of FOMC would be a little bit more bullish than it really was. All the put hedges came off and then the market came down. So that was a very wide-ranging candle on FOMC, very bearish look, but then the market's recovered here, and you can see it's above our key green line here. This is my bull-bear line in the sand, and these kinds of separations, you can't discount them. This is a really important juncture right here for price, because I really do believe if the NQ can separate above this trend line, this is really a Gann fan that's drawn based on a Mars cycle. If NQ can separate above this, then we're really off to the races this year. But this week's video is called One More Low to Go. The outlook that I'm taking is that before we get all bullish and set our sights on much higher prices in the future, we've got one more retest to go to set that up, and I'll explain why. So this coming week, we've got the producers, the PCE number, which is a key input into the inflation number. So geez, I've forgotten what it stands for. I think it's like producers consumption expenditure or something like that. Anyways, PCE numbers drop on Friday this week. And this yellow arrow here, that's the existing forecast that we showed last week. I'm going to update that this week with some of the information that I'm going to share. So let's go through, and first I'll explain why I'm bullish longer term, but bearish shorter term. Okay, so it starts with Fed balance sheet. Fed balance sheet over here is the orange line. You can see liquidity has boosted up significantly and stayed elevated. It's back to levels unseen since last April. And yeah, that's just basically more fuel for the markets to go up here. The other thing I'm watching closely, though, is breadth. So if we take a look at the QQQ breadth, and the indicators I'm showing here are the, this is the McClellan Summation Index, and this is the McClellan Oscillator for the Qs. Breadth, while red, is starting to flatten out. You can see the Summation Index is starting to decelerate on its descent, indicating that there is a turn in progress. And we can also see a very obvious pattern of higher lows here in the McClellan Oscillator itself. So this is a little faster index, so it's starting to show some improved breadth as we move forward. Now, if we take a look at the equivalent on the ES here, we see a similar pattern, breadth starting to flatten out a little bit in the McClellan Summation Index, and same thing with the oscillator. And we also have the JPM collar displayed here. This is a major market structure that I believe is going to be containing price on the ES for at least until the end of the quarter, until it resets. There is no equivalent major structure like that on the NQ. So what this what this means is that there is going to be a big incentive for JPM to step in and defend this 40-60 level up here. Sorry, it's 40-30, which is where the short calls leg of this collar sits. So there's going to be a huge incentive for them to step in and defend that. That's going to act as a cap on prices through the end of the quarter until the collar gets reset. Okay, so we've got liquidity positive. We've got breadth turning, starting to turn, maybe a little early. Bonds are also very strong. We may have seen the peak in rates for the year as liquidity enters the system and bonds turn around. But why am I a short-term bear? Let's go and take a look at that and review that rationale. Okay, so it comes down to something that we've talked about a lot on prior weeks, and that is, well, we've got a couple of reasons, 3 reasons to be exact. Right now on the SPX here, we're showing the daily mass pressure index. This is based on a Venus cycle, a composite of recent Venus cycles. And I'm also going to add in short-term waves. And I'm going to add in also, actually, I'll leave GAN waves off for now. Okay, so short-term waves, as usual, yellow line is Mercury speed, blue line is Mercury-Venus separation. Both of these are important for different reasons. We tend to see major pivots at inflection points of Mercury-Venus separation. And we also tend to see corrections in the market as Mercury speed declines, okay? And this is all lining up as well with the mass pressure index here, which is a composite of recent Venus cycles. So this is leading me to conclude that we've got one more low to go before we can turn bullish and sort of ride the acceleration of Mercury speed up into the summer. So let's just go and update our forecast based on this information. One of the things I'm looking at, if you look at this in a little bit more detail, and I'm going to turn on GAN waves now. Okay, so this is a lunar cycle, and we can see here that we've got one more yellow GAN wave, which tends to be the top of the lunar cycle. And then we've got the blue GAN wave on April 12th, which tends to be the low of the cycle. And that is lining up with sort of the end of the deceleration phase of Mercury. And it's very close to peak. Well, this inflection point, I shouldn't say peak, it's actually a low in Mercury-Venus separation. So we've got a lot of factors conspiring to tell us that, April 12th is a key date here, okay? So that's important. And then we're starting to see little glimmers of green here after that, after this GAN wave low on the 12th. So this may indicate the end of that drop around April 19th or so. But I do believe that we are sort of in the last week or so of being up here at these elevated prices. The last thing holding it up is really going to be this GAN wave yellow. After that, we've got steeply decelerating Mercury speed, and we're heading in towards a Mercury-Venus separation inflection point. So let's mark that up on our chart, and we'll update our forecast here in TradingView. Let's go over to the right tab. Okay, so here's our chart from last week. One of the changes I'm going to make here is I'm going to add a new path, and I'm going to add a new rectangle. Okay, this new path, and finally I'm going to shorten this guy because I still think we do get a bit of a pump here. in April 3rd for the reasons I talked about last week. But I do think that pump is going to be limited. And then ultimately, we've got, this area here from April 12th to April 18th. This is kind of like my bottoming zone. And it's right around this GAN fan, this blue GAN wave, I should say. And then I'm expecting an inflection point here. And after that, then things start to look a lot more positive. So right now, the forecast remains unchanged in the short term. I see potential for a move up into this GAN wave yellow on Wednesday. But it as usual, it's never going to make a straight line. This could be a major inflection point in the market, as they tend to be. If you scroll back in time, you can see the last GAN, the last yellow part of the GAN wave cycle happened on February 2nd, and that obviously was a major inflection point here. So this is one of the things I like about these GAN waves, is that they do tend to mark major inflection points. And then we had an inversion here on March 1st. Makes sense to me that March 29th marks the end of this cycle and then the start of a new one. And then I'd like to see us revert to normal behavior here, where blues mark lows and yellows mark highs. So this is all kind of lining up for a higher low in the April 12th to April 18th area. So we're going to watch this pretty closely. Now, again, as usual, I want to advise you that my focus is on time and not price. We may not get all the way down here. It may be higher low up here at 12,200. All right. So this is really just the shape of what I expect price to look like. It's not an actual price projection or a level projection. Okay, so that's it for the updated forecast. Let's go and do a quick tour of the other major indexes that we look at in time trades. And we're going to simplify the view a little bit here because I've gone over the key parts. So we've looked at SPX. Let's take a look at NDX. Okay, so NDX is showing some bullish activity and probabilities here with a potential low on March 29th. Now, you might be wondering, okay, Blair, why are you ignoring these machine learning forecasts? And the answer is, well, in short, that I'm not. It's just that these can and do invert, right? So in effect, what I'm saying with this forecast is that March 29th, March 30th, this pivot low down here, which is relatively low probability in the scheme of things, is going to invert and become a high. And then I'm expecting that we come down into our pivot area around April 11th, April 12th. And you can see here that there's some probabilities of moves up in that area as well on the NDX. Okay, so let's take a look at DXY at the dollar. This is kind of the kingpin, and we can see there's continued red here indicating dollar moving down, liquidity moving down, or sorry, liquidity moving up, I should say. And we've got and it looks like this is going to be a long-lived trend into early May. That's when we get the next bit of pivot lows here on the dollar. So this lines up with the point of recognition that I talked about last week, that the dollar is going to be trending down as the Fed continues to increase the balance sheet. Okay, so that's DXY. Let's take a look at Bitcoin. All right, so Bitcoin, we've got right now, this is on a manual scale, okay? And I like to use that with when I'm looking at GAN-FANs, and we can see here that Bitcoin is up against some GAN-FAN resistance. It's had a great run from about 20K up to 28. But it's running into some GAN-FAN resistance up here, and we've got some probabilities of a move down. And then we've got a pivot low down here in April 7th, April 6th, in that area. So it looks like the upside on Bitcoin is going to be capped in the short term. There may be another opportunity to enter some swing trades long in early April once we see this move down. But right here with these major GAN-FANs overhead, this would have to Bitcoin would have to make a major move up above it on volume, maybe a gap up. I mean, obviously it's Bitcoin, so anything is possible. Also, this could invert. This pivot low could invert. So I encourage you to take a look at these dates as not just literal pivot lows, but pivots in general. So if this inverts and becomes a pivot high, then that's implying that we pop up above this GAN-FAN, which would be hugely bullish, up into this area here in April. So keep a very close eye on these GAN-FANs, mark them on your chart. I've got videos on the channel that show how to use time trades to set up these GAN-FANs in TradingView, and then you can overlay this with real-time price on Bitcoin. Let's take a look at the same thing on Ethereum. With Ethereum, it's maybe a little bit clearer here that we've got a potential to see an inversion in this pivot low because we have this cluster of moves up right around the same time. Okay, so we could be seeing a move down and then a big move up as we head into early April, assuming this inverts. So again, keep a very close eye on the GAN-FANs here as we get closer, within 5 days, because remember, these probabilities are a 5-day increase. So if you want to take a look, April 4th, 5 days prior to that, 1, 2, 3, 4, 5, March 30th, right? So keep an eye on that. And around the end of March, and if you see if we start to see moves up here in the cryptos, then that's an indication that could run until the first week of April. All right, another thing I'll call your attention to is one of the things that GAN did is he paid very close attention to where these GAN-FANs crossed. And you can see here we've got a cluster of crosses of GAN-FANs starting April 1st and also April 7th, and then ending over here on April 15th. So keep that in mind as well. You can see we had a cross here that looks like that marked a temporary high on March 23rd. So that's another thing to do offline that I'd encourage you to take a look at, is take a look at where these GAN-FAN crosses are and line that up with price action. Okay, so that's Ethereum, and we're going to wrap things up today with a look at the NIFTY as usual. Now, NSEI, and the NIFTY in last week's video, I was pretty bullish. I really like the setup here because we were on top of some GAN-FANs, and we had a cluster of green coming up, and it looked like a great setup. Friday, however, we slipped down below this 1x2 GAN-FAN up from 0, and also an orange magic level. So that's not a great look if you're a bull here on the NIFTY. So I'd encourage you to very much tighten up those stops on the NIFTY. And if we do indeed get a move up, into this pivot high here on April 11th, that would be wonderful. Also notice that that is also very close to well, it's right the same day as a cross of 1, 2, 3 major GAN-FANs here. So I'm not abandoning the bullish case at all, but it isn't quite behaving the way I'd like to see. I expected more of a pump this week on the Nifty. So manage risk there appropriately. And if it doesn't work, it doesn't work. There's always another opportunity around the corner. Okay, that's it for me. Thanks for joining me, and we'll talk to you again next week. Bye now.